GameStop is back, but this isn't a meme anymore. With a $100 billion style CEO compensation plan, massive store closures, and whispers of a Bitcoin pivot, GameStop might be setting up for something explosive. Now, is this the next legendary squeeze or the final rug pull? Before we dive into Ryan Cohen's massive new payout plan, I have a challenge for you. If this video gets to 100 likes, we will release a dedicated full-scale business analysis of GameStop. We will look at every single number, dive into the balance sheet, and break down the full stock chart across every time frame to determine if GameStop is truly a viable long-term investment. First, let's talk about the bombshell that was dropped on January 7th. The GameStop board officially aligned Ryan Cohen's future with investors in the most aggressive way possible. First of all, we have the all-or-nothing bet, with Ryan Cohen's new compensation plan at 100% risk. He will receive no salary, no cash bonuses, and no stock that vests over time. Now, for his award to fully vest, he must grow GameStop market cap to $100 billion, which is a tenfold increase from the current levels. He also has to hit $10 billion in cumulative performance EBITDA, which is a performance-based package worth up to $35 billion if he actually pulls this off. Now, while Cohen achieves that $100 billion milestone, the physical footprint is shrinking fast as part of a store portfolio optimization. First of all, GameStop is seeing massive closures, with estimates predicting that 295 to 410 US stores will close in early 2026, as this follows 590 closures in fiscal of 2024. Now, these cuts are part of a desperate pivot to focus on digital sales and high-margin collectibles like Pokemon cards and Funko Pops. There is, though, the financial pressure, as revenue for Q3 of 2025 fell to $820 million, down 4.5% year over year, as hardware and software sales continue to struggle. Now, here's the X factor that nobody is talking about, and that is that GameStop is becoming an investment powerhouse. GameStop ended Q1 of 2026 with nearly $9 billion in cash and marketable securities, and as of January of 2026, the company holds 4,700 Bitcoins valued at approximately $472 million. Some analysts do believe that this Bitcoin pivot made GameStop infinitely more attractive to crypto enthusiasts and could trigger a massive rally if the crypto market stages a comeback in 2026. So, is the squeeze back on? Well, the short interest recently rose to 16% of the public vote, and the short interest ratio is currently around 12.6 days, meaning that it could take over 2 weeks for shorts to exit their positions if volume doesn't spike. Now, while the retail remains speculative, Wall Street analysts have a consensus reduce or sell rating with an average target of $13 per share, as they are betting the physical business continues to flounder. So now that we cover the most important news, let's transition toward the charts and analyze GameStop across the daily timeframes. So first of all, we'll be analyzing the overall short interest ratio here on GameStop. Towards later, we'll transition on towards the options market and analyze the put to call ratio to kind of gauge where the stock will be over the next couple of trading sessions here. So let's first of all begin with the short interest overview. As you can see here, the short interest chart here has been increasing over time. Obviously, the highest was in 2020 when we saw that big upward spike in GameStop and became, that meme rally. We did see a little bit of a spike in 2024, around 2.71 billion here in interest, but over time we have been seeing a steady increase again, and we have been seeing ever since this Q1 of 2025 around 652 million, and it increased all the way to 1.5 billion here. So this is saying that obviously there are a lot of shorts interested in this name, and they are starting to add more supply. Furthermore, to add even to this conviction, if we look at the days to cover chart here on GameStop, we are approaching pretty much the same levels that we had in around Q1 of 2024. Obviously, after that date, we saw a very heavy decline around less than a day to cover their positions. But ever since then, we've been seeing the shorts adding more and more supply to this name. Now seeing that the overall days to cover is around 9 days, which still, don't get me wrong, is a very high number, but it is nothing compared to the overall highs that we had around 19 days to cover, which is significant, around 2 to 3 weeks here. Now, if we look particularly here at this exact day, we have been seeing a decline here, obviously from 13 now towards the current sessions are around 9 days to cover, which has been saying that there have been a lot of shorts being wiped out currently, and this is exactly what we look for in a short squeeze name. We want to see the days to cover ratio slowly start to decline a little bit which does signal there that, a lot of supply is, being outtaken here by the short-term demand. Now, transitioning towards the put-to-call ratio for GameStop, on my right side, we see here the expiration date, the 16th of January 2026, all the way towards 2028 here. So we do have a very vast amount of time frames here on this data frame. Looking at days to expiration, obviously here, but if we look particularly towards the more interesting part, it's going to be the call volume and the put volume. So the call volume is way more, than the put volume on the shortest expiration date, pretty much, more than 10 times. And we see this pattern being consistent across the majority of the time frames here. We have the call volume higher than the put volume, right? So we see this momentum keep going. Even here on the 17th here of April of this year, we do see the call volume being extremely higher than the put volume. And we also see this on here June 18th here of 2026, with the call volume being way higher than the put volume. So what this signals to us is that there are buyer interest, but yet the supply is still being heavily factored into this stock. So we really want to see in this name is going to be an expansion of the volume and slowly start to eat up that supply, which is what the buyers would start to resume and get within the name heavily. So now that we've analyzed these important metrics, let's transition on towards the daily and hourly chart of GameStop to further analyze this even further. So now that we are on this time frame of GameStop, we can fully assess the price action and kind of gauge where it will be over the next couple of trading sessions. So first of all, let's begin here with our interpretation of the price action. So looking at these current anchored VWAPs from the swing high that we formed in May of 2021 and the IPO anchored VWAP, which is pretty much here, obviously the initial public offering in 2002. This is where we're currently seeing the price action fluctuate. So we are between this range of $64 and around $10 per share. We have been kind of been within this range for quite a while, and that latest dip that we saw in April of 2024, that is where we found the buyers here from the IPO anchored VWAP here, right, from the initial public offering. And that is why these anchored VWAPs are important after such a long time, because there are still individuals that are interested in this name from those levels, right? So these people are long at an average price of around $14 per share and 36 cents. Now the people that came in and shorted heavily after the big spike that we saw, right, from around $1 to pretty much $180 here in 2021, these people are on an average price of around $30.79. So with us currently being below this level, this does dictate that these individuals are currently in control of the overall stock, right? As we know, the sellers. And we haven't been able to get above it. Each time that we try to get above it, like here on this date and here, we find intense supply that brings the price down even lower. So what I'm currently seeing, and this pattern is known as the anchored VWAP pinch. We have an important level high, an important anchored VWAP from an important support level or a lower level, and us being between it shows indecision. Now, what I would really like to see on GameStop over, let's say, the next couple of trading sessions, even months, because this is going to take a while to formulate, would be the following. So now that we are seeing that short-term resistance, what I would like to see is something like this. So we kind of bottom out, right? We find some buyers around this general zone. Looks like it's a double top here. And we see this momentum. We break above such a level of resistance. We finally get above it. And we rally towards the next area of resistance, which is that swing high anchored VWAP at around $30 per share. So now that we have this level of support here, we'll call it $19, labeled it as green because buyers came in here. And if this does happen and we get above this level of resistance of $24, that would be a double top that would be occurring exactly at this point. And what this would show is that buyers would come emerge, and we can go along this name towards the price target of $31, and that would be a very nice return around 49%. Obviously, this would be the initiation of a bigger move, which I believe can be achieved towards the highs of $35. That would be the next area of short-term resistance that GameStop can find here, obviously depending on the macroeconomic sentiment and the overall news that surrounds the stock, right? If you look at higher levels of resistance, that would be, let's say, the $50 zone here on GameStop. So we can say that this level will be the next area of resistance where there would be a lot of sellers waiting to add in supply. So let's say, this does happen. Well, you can go along the name and you can, have your full price target towards $48, and slowly as these levels of resistance hit like $31, $35, you can take profits, let's say a certain percentage of your trade, and then let the rest run towards the full price target, or your final around $550 here on GameStop. So right now, the stock is looking like it's trying to find a bottom, and we're simply waiting for these buyers to truly defend by showing us a double top pattern, which is going to be a reality if we do break above this resistance level of $24. And this is where I believe it will rally to $30, and then $35, and then the next area of resistance of $48 here on GameStop. So GameStop is no longer just a video game store. It's a $9 billion tech and asset play led by a CEO with a massive incentive to win. The obvious reasons to be bearish are still there, but the contrarian bull case is leaning on high margin collectibles and digital assets. Now, are you buying at the zone, or are you waiting for the Ryan Cohen payout to prove itself? Drop a bull or bear in the comment sections below, as we're aiming for 100 likes to unlock that deep dive business analysis. And if you found this analysis helpful, hit that like button, subscribe for the latest GME updates, and I'll see you guys on the next video.